Good morning. This is Japanese Economic Review Channel. In today's briefing, we look back at yesterday, May 12, 2026. The Japanese market showed resilience, successfully navigating significant intraday volatility. Supported by a strong tech rally in the U.S. from the previous night, the Nikkei 225 staged a notable rebound. However, the internal market dynamics from yesterday suggest a complex. Yesterday, the Nikkei 225 rose by 324 points to close at 62,742.57, marking its first rebound in 3 days. This positive sentiment was a direct carryover from the Nasdaq, which had hit a record high of 26,274.12 on May 11th. Despite a slight trend toward yen appreciation at 157.46, investors yesterday remained focused on growth in equity markets. The primary tailwind yesterday was the AI revolution. Robust demand for semiconductors from leaders like Qualcomm and Western Digital effectively neutralized macroeconomic shadows and geopolitical uncertainties regarding peace talks with Iran. Yesterday's session proved that structural growth in AI infrastructure remains the dominant driver of global tech momentum. Yesterday's trading was a tale of two halves. The market began with a massive surge, hitting an intraday high of 63,218 by 9:58 a.m., an 800-point jump. However, this peak triggered heavy profit-taking in heavyweight semiconductor stocks. While the index leveled out by the close, this afternoon fade reflected a cautious stance regarding near-term valuations. While the headline Nikkei index looked strong yesterday, the market breadth told a different story. On the prime market, 849 stocks declined, while only 674 advanced. This indicates that yesterday's rally was quote, heavy, where concentrated buying in specific large-cap index heavyweights masked widespread sell-offs in the broader market. Yesterday's capital inflows were concentrated in 20 advancing sectors. Financials, such as Tokyo Century and Orix, alongside non-ferrous metals like Fujikura, led the gains. Conversely, capital outflows were seen in the retail sector, with 7&I Holdings and Fast Retailing ending the day lower, as investors rotated into infrastructure-related value stocks. The growth market's 5-day winning streak ended yesterday due to sharp profit-taking. The drone sector was hit particularly hard, with ACSL and Terra Drone seeing significant drops. Despite the broader correction in growth stocks, niche strength remained, as seen in the resilient performance of Astroscale Holdings and Trial Holdings. In the currency markets yesterday, we observed a slight trend toward yen appreciation, with the USD JPY closing around 157.46. While a stronger yen can typically be a headwind for exporters, yesterday's relatively stable FX environment provided a neutral backdrop, allowing sector-specific earnings expectations to drive the day's action. Yesterday's corporate news highlighted rapid innovation. Fujikura announced a new high-density optical fiber cable for AI infrastructure. In the digital space, Rakuten initiated a strategic rebranding of Rakuten Cash to Rakuten Pay Balance. In automotive, Honda and Suzuki both released updates for their popular scooter and commercial vehicle models. In retail, companies launched tactical initiatives yesterday to stimulate consumption. 7&I Holdings introduced a high-volume G-Series ramen, while McDonald's announced new nationwide collaborations with Chiikawa. Additionally, Pan Pacific International opened a specialized omiyage donki in Ishigaki, targeting the recovering tourism demand. To conclude our recap of yesterday's session, the prime market closed with a robust trading value of 10.43 trillion yen. Although the index rebounded, the divergence between advancing and declining stocks suggests a selective stock pickers market. We will watch today to see if the AI-driven momentum can finally broaden out across the entire market. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.